Nobody understands how currencies actually work, which is why most people are broke. The dollar is the king. Yes, it's boring. Yes, it's beyond people's comprehension. Yes, no one explains correctly what exactly the importance of the US dollar is. The only thing you'll see is crazy Bloomberg headlines saying that the dollar is correcting big time and we still have the debasement trade on. The dollar is the global risk switch. It is a master indicator of liquidity in the current market. And if you want to know exactly how you can use the dollar to front run every single market correction which comes in the future, or use it for generating trade ideas, there is a PDF in the description below which tells you exactly what you should do. When the dollar goes down, that's usually a risk-on signal for equities. And if the dollar goes down, and you just use simple plain logic, that just means that oil prices come down and the prices of commodities come down. A lot of emerging markets have their debt denominated in the US dollar. As I said before in a previous video, everyone transacts in USD, whether countries are buying oil from each other or other products. These things are always priced in USD. And a lot of these companies actually have their debts priced in US dollar. So when the dollar comes down or corrects heavily, that just means that debt in the emerging markets, that also reduces in value, which is really good sign or which is a really good indicator that these countries are gonna outperform. And you'll find hidden alpha in these names. Another thing which people should understand is that in the game of currencies, it's all relative. You can't just single out the dollar's performance. It's what the dollar does against the other currencies. Even the DXY, it's like a multiple composition. About more than like 40 or 50% of the DXY alone is what the dollar does against the euro. It's all relative. The dollar also reflects the Fed policy, which is why professional traders are obsessed at looking at what the dollar is doing. It has corrected massively in 2025 and is now starting to kind of go up right now. Dollar weakness isn't necessarily bullish long term. It's usually deflationary, and deflation is never a good sign for equities. With the dollar coming down, we have margins compressing and growth stalling. So professional traders look at the dollar to look at Fed policy that is priced in the dollar. They look at the dollar to front run global liquidity. They look at the dollar to find out what emerging markets are doing, their debt, and they're going to use the dollar as a deflationary measure and pricing power. If you want to learn more about how the dollar actually works and how it's front run every single market crash and how the professional traders actually use it, click the link in bio.